All right. Good morning, everybody. We will get started in a few minutes. Market's kind of blipping around a bit ahead of the numbers. I'm seeing all kinds of posts on social media and in the news. This is probably the most widely anticipated, I guess would be the right word, NFP we've had in a long time. Everybody's chatting about it. So it'll be very interesting to see how this one plays out. I'll do a little bit of context stuff in a few minutes. We can just kind of take a look at where we're at and where likely extremes are is a useful thing to look at on situations like this. So, let's just start with the most recent stuff. This is just the overnight activity, and it's relatively quiet. So that's not telling us much, and that's kind of what you'd expect. So that's not remarkable at all. Um, TPO view is very interesting. Here's the TPO view for ES. Look where we are. So this was the big drop a couple of days ago. We consolidated that overnight. This was the following day, regular trading hours. This was the following overnight. Again, inside day, inside night, inside day. And then this was yesterday. We broke down just a little below that. And then on the overnight, we've got a double distribution below it as well. So this is not a particularly stable looking TPO, but you could easily argue that it could explore both ways and is probably likely to do that. This is NQ, which looks almost identical, at least the recent history. So the market's really been kind of sitting on its hands waiting for this NFP release. So we are going to talk about the upcoming TRG class as well. Let me grab a link for that real quick. And I'll stick it in the chat. Okay. So if you're interested in checking out, I'll talk more about that after we get the 15, excuse me, the NFP report. But here's a link to the page that talks about the upcoming class. That's that page right there. So check it out. If you have any questions, let me know. We will come back to that after we get NFP. But look at this back and forth energy, and this is on no volume at all here. So, that entire move down was 800 contracts, although this earlier drop was 2,000 contracts. So that was a lot more downside. But you can see the liquidity is really thin. There's many, many levels that have two digits. And that's just going to make us real likely to move around quite a bit. So we will come back to that and discuss that in some more detail in a few minutes. So anyway, welcome. We have a lot of guests here. Welcome, guests. Welcome, regular TRG folks. As I said, what we will do is the NFP number, which comes out in about 10 minutes, 11 minutes. We'll let that come out. We will look at a potential trade off of that and whether or not we get one. Then after that, I'll take a little break for a few minutes and then we'll talk about the upcoming class and we'll look at some wave volume examples off the open as well. But for the purposes of this NFP release, I'm just going to watch ES on this main screen. But I have another screen queued up behind it, just to be clear, which I will switch to. And that's this one. And this is both ES and NQ, as well as the micros for NQ. And we'll look at this after the NFP numbers. Looking at it, this with this much detail, when the numbers are coming out and it's really only going to matter in ES, that isn't worth doing. So that's why we'll stay on this particular view to start. What you're seeing on that chart on the left is wave volume. It's just a zigzag of the volume on a very fast plot. This is 15-second bars, and they're also equivolume bars. So the wider the bar, the more volume. So you can kind of get a sense of the energy of a move. And over here on the right, this is a dome of ES, this is a dome of MES. And so I'm just watching the liquidity, and then what you're seeing in these colored boxes, that's just the traded volume. So liquidity is what people say they're going to do. The traded volume is what they're actually doing, which often are different. And this gives us a chance to get a sense of where there's inflection points, and we'll talk about that. The slow plot in the upper right is just a regression of the short-term range. And then the one below it is the VWAP with a couple of SD extremes of the VWAP. And again, I'm just looking at price two different ways. One, weighted by volume, and the other just in very, very short-term statistical range. On my other screens, I am running regular footprints, but they're not really very important. I showed you guys the TPO views, which are important. I've also got the session and a footprint here. And again, that can give me an idea what the structural picture looks like. But for the purpose of this NFP release, the structural picture isn't critically important. It's going to really depend on extremes. And again, I'll bring that TPO view over here. What would be an extreme? Well, right now, if we get below 54.70, that takes out the overnight low, and things could get real interesting below that because it's just an air pocket. This is all the recent range up here. We broke down from that recent range right there, and then we're challenging this range that's all the way back at the end of July. So to the downside, it could get very interesting if we see that break 54.70. To the upside, there's a bunch of old structure that's weak, about 100 points up at 55.70, at 5600. Those gray lines are old single prints in the TPO, and those often get revisited. But obviously, this entire thing's going to depend on how the market reacts to the NFP report. And it could be a bit of a two-headed animal, the NFP report this time. What do I mean by that? Well, good news is bad news is good news. That's markets like to do that. And so the question is, if the report's good, is that good or bad? How's that going to affect what the Fed does with interest rates? And that's the big question. So there's really not a clear answer or a clear response if the number is, quote, good or the number is, quote, bad. There's really no way to kind of put an expectation on what will happen. It's going to depend on the behavior of all the people that react to it. So this is always true in the futures markets. The news is irrelevant. It's the reaction to the news that matters. And the only significant mistake you can make is trying to predict that. The best thing you can do is, let it happen and see the reaction. And often there's a really good setup if you can react to it fairly quickly. So that's what we will be looking to do. Again, welcome guests, welcome regular TRG folks. If you have a question, you can stick it in the chat. I will get to it. I'm one of the co-founders of TRG along with Lee Harris, who is here. I don't know if he'll be talking much, and our community manager is JVC. So they're the three hosts you see.
Hello. I'm just lurking.
Your volume is really low.
Well, that might just be I'm talking kind of quietly. I'm not, but I'm pretty normal now. I should sound like my normal
it might
self.
be that mine's down.
That's probably it.
You don't want to wake the cats up, right?
Yeah. Actually, everybody else is already starting to get up. So.
Yeah, you know why it sounds quiet to me? I've got a bunch of fans on in here. Let me turn my fans down.
Only fans?
Yeah, on my only fans. I wonder if anybody's making a fan, an air fan called the Only Fan. That would be really genius.
I have heard, is this true? Is this urban myth? I don't know. I have heard stories of people believing that it is they sell fans site. And, it's an e-commerce site for fans. And they go there and they're like, yeah.
Oh, that's too funny. Yeah, there used to be like only lamps and
Oh,
only
yeah.
light
Lamps
bulbs. Yeah,
Plus and,
yeah.
all kinds of, yeah.
Okay. Cal, is JVC's volume okay to you? Or
Testing, testing. One,
yeah,
two, three.
testing volumes. Sounds good. Okay,
Yep.
cool. All
Cool.
right. So again, we're a couple of minutes out now, about looking like 3 minutes, 3.5 minutes. This is going to be very interesting to watch. Look at the liquidity getting out of the way. This is hysterical. You can see the liquidity is literally just getting as far away from the inside bid and ask as it can. Look at this, all this up here. It's double digits only, all the way up to 0 from here. So, and there's a little bit right above the current trade, but not much there. So this ought to be a fun one. Like I said, if I see a really good opportunity, I will put the trade on first, and then I'll explain to you what I think I'm seeing. I'm not going to try to explain them first because the trade opportunities go by way too quickly in this environment. So let's scoot this over so I can get to it a little faster. See, that's on. That's on. All right. And I don't know if I do trade, if I'll do micros or minis. We'll see. Might do blocks of micros. And ES, I like to just use minis if I can. Micros can sometimes be a waste of time, but in NQ, completely different story. In NQ, the micros are your best friend, but in ES, tick value is really good in the minis, and when there's decent liquidity, you can trade pretty well around the liquidity, but that's not the case right now. So let's see what we get. Just as a reference point, before we get the number, by the way, we have a pretty good size range overnight. ES's range is 47 points, almost 50. 230 points in NQ. Those aren't huge, but they're significant, and the volume is decent. We've done a 223,000 an hour before the open. We're getting back to fall volume finally. At least in spurts we are, but we're down quite a bit here. If we opened here, we'd be gapping down about 27 points. So really need to see this reaction. That's really going to tell us what to do here. Or nothing. There may be a nothing trade. And either way, we'll go into talking about the open and using this wave volume approach to just trading at any time. That's what the class is going to be about. I'll get into that after we do the after we see the NFP numbers and see the reaction, and that'll probably take 15 or 20 minutes. So that's the plan. If you have any questions, throw them in the chat. Otherwise, we will see what we get. Boy, the book's really thinning out now. Look at this single digit liquidity. Somebody puts on 100 lot, we could move 20 points. That's crazy. Normal liquidity is 100 or more at every tick level. And look at this, 1, 5, 3. Nobody wants to get caught in a big move, no matter how big they trade. I always love watching this stuff. For those of you that don't know me, I've been trading for 50 years, 51 years. So I've been around for a while. Okay, wow, we got a big reaction. Huge reaction. We filled the gap and then some in RTY. ES filled most of the gap. Now the gap has just filled right there. So that's crazy. I'm just going to let this let's watch this on here. This is going to be a better view to watch this right now. This is just a 1 minute plot. Again, using equivolume. And let me just zoom in on it. You can see that's the VWAP right there. We explored all the way up to 2 standard deviations away from it, almost got to the same to the downside, and we're up here. We're holding up here, at least for the moment. So this is interesting to watch. I'm not in a rush to trade it because it's like, where would you trade this yet? It's not a good obvious spot. You can see how the volume really picked up here on this fast view. So, we're kind of right back to the spot we were on, just above it, right before the news. So could there be a long right here? Yeah, maybe. Let's see how far down it pushes back to the range here. So we're right back on the VWAP here now. This is the statistical range up here, which is totally random because we're moving around so much. But if I crunch that together, you can see we're at the bottom of it. So you could make an argument for a long over here somewhere. Let's see. Maybe I'm probably going to have to chase it though. I've got an order for a micro and an order for a mini here. I'm just trying to see how hard it is to get a fill. If I'd been a little more aggressive on that push down to 83, that would have been a decent spot. Let's see if we can get a fill down here now, around 82 to 85 in both cases. This will just be for a quick scalp. Let's see what it does. Okay, the micro one filled. So I'm long over there. Let's see if we can get this mini one long right here too. Okay. And I'm going to let the mini swing. I'm going to protect the micro right away. There we go. Okay, so I'm long 84. It's trading 87. So that's a quick 3-pointer. Same story in the micro. Flatten them both out. All right. That was a quick couple $100. I'll take it. Still moving around a bit, but that was kind of an obvious long trade to take because we explored so far up. We came right back to the range we were on, and that was right. The VWAP is right there. So just, responsive buying would say that was a good spot to scalp long, but I don't know that I'd keep doing that right now. It looks a little, well, you know what? I was about to say it looks a little tentative, but it's back above. It's back almost to 0-0 here. Let me show you what that looked like on the TPO because that was really the reference for that. I showed you guys this before we got the number. See, that was the low down there, that volume, and we traded right back up to the low of yesterday's regular trading session. And it got a little bit above that. And then came back into this range, which has this double distribution now. So again, down at the bottom end of this range, I like a long just because of that, but I wouldn't be really aggressive because that could end up getting run over. But so far, it's a nice little scalping spot. Let's see if we can do it again down here. Kind of hard to figure out exactly where to do it though, because we're bouncing a little bit here. So again, if I'd been more aggressive, I was right on the right spot. Let's reset the volume and see what's going on here. Right at the top of the value area. Yeah, again, if we can catch a little pushback, this is a good spot to nibble on. At least right now, you can see it's still kind of in price discovery. Again, I wouldn't be buying it up here because that's kind of the top of value, even though we've been quite a bit higher. But a little push down around the VWAP so far has been a good spot to nibble. So you can see I got a couple of orders right around that spot. In a minute, I'm going to switch over to the other view so we can see NQ as well, because I'm watching it just on the list here, and it hasn't recovered quite as nicely as the other indexes have. And we'll know more about why once we open up and we see what the individual components of the NQ are doing. But NQ is a better instrument to scalp when we're moving a lot. But if there's liquidity and a good solid range, you're better off in ES because its tick value is higher, and the liquidity kind of helps you avoid being wrong. And you can see the liquidity has picked back up. We're at least back at double digits. It's not normal yet, but that single digit nonsense went away. So it's just kind of churning right here at the top of the value area, though, and that isn't a very exciting spot. So again, let's see if we can squirt down here somewhere and catch another long. Or maybe not. Now it's all the way back up. All right, I'm going to dump that and cancel those orders, and we'll switch over to the other view so we can watch NQ as well. So just give me a second to do that. You'll see it here in just a second. And okay, well, okay, I'm clicking on it too many times for it to catch up to me here. Hold on a second. There we go. Okay. So same thing, except we're watching both instruments now. And again, there's a really good long setup. If you can get an entry below the market here, it's pushing up on good chunks of momentum. But again, I wouldn't just be too aggressive yet. Down lower around the VWAP is a good place to try it. But up here, you could get swept down pretty badly. So yeah, and oh, look at all the motion. We're getting a lot of price exploration, price discovery over here in NQ. So I have two NQ domes. One of them is 4-to-1. So this is just a point at a time. In other words, it's crunched 4 ticks. And then the one over here just next to it that's on MNQ, that one's tick by tick. So you can kind of see the real momentum there. And then this kind of helps you see where it is in the range because NQ has such giant ranges. So that's why there's 2 of those over there. And then over here, we just have ES. And the top of value is right there. And the VWAP is all the way down there. And those are 2 spots that have so far been in play as longs. So it's awful jumpy up here, though. I'm not gonna take that chance again, I don't think. Okay, so we're gonna have the normal TRG trading the open session will be at the normal time, which is in about half an hour. And I'm gonna do kind of a special edition of that session and show some of the wave volume stuff and what the chart to dome class is going to be about. And there's a link for that I just posted a few minutes ago in the chat. I will do it again. And you can find out about the class there if I can post that. Okay. Yes, I will take a break. Don't worry. I'm just making sure I haven't missed anything before I do. This is interesting. We're pushing up pretty strongly. We could get a massive short squeeze on the open here, guys, because we're getting up into the area where that would start. If you look at if we can get up into this gap here and, get going back into the range of the previous couple of days, then we've basically absorbed NFP successfully. The news of it, I mean. So anyway. Meanwhile, wave volume, this is a slightly faster wave volume here. This is 5 seconds instead of 15, but you can see, this was the news here. This was that pullback. This is where we started playing longs, and it's still a decent long. You just got to get a pullback and manage risk. So let's see if we can get a good trade off the open. I think we should be able to get a couple of good trades off the open. I'm going to put the equities up so that when we open, we can see that. And wow, as I'm explaining that, we're getting, again, some decent momentum pushing at the highs here. Very interesting. All right, this is a good time to let the market digest this. The reaction was pretty decent to the upside, but we're still gapped down at the moment. And now we're seeing some energy back to the downside. So let's let this play out for a while. And oops, you know what? I'm going to switch this one over here to ES. Give me a second. On the other one, I had done that already. Okay. Yeah, if we trade in this world, we will trade ES over there, and then NQ and MNQ. We might do either one of those. All right, I'm going to take a short break. Is gold, Jerry, gold. I've been watching Seinfeld reruns. That's pretty funny. All right. Anyway, we'll talk more about the open, and we'll talk more about how you use this volume approach in a few minutes. So hang out. Welcome guests once again. We'll talk about using wave volume. We'll talk about what the class is going to be about. We'll see if we can get some trades off the open. All of that's coming up. I'm going to take a short break between now and then and just kind of reset my brain. So let's see here. We will start about 6:20 now. We will start about, let's see, it's way before that. What time is it now? 5:41. So I think what we'll do here is I want to see what the top of the hour looks like. So I'll be back at about 5:50. So in about 10 minutes. So keep an eye on the price action here. Again, welcome guests. We will go through what all this stuff is and how it works in a few minutes. I'm just going to set this right under the clock so it's obvious. Okay. Okay, JVC, we'll see you later. All right. If you have any questions or comments, stick them in the chat. I will get to them. Interestingly, if you look at the top of the Globex profile, in other words, the whole session, we ran stops up there. I mean, that was pretty clear we were doing that if you were watching the wave volume. But what's interesting is we've come a long way back up to there. It's clearly there were stops, but there's a setup here again to really aggressively take out the shorts. And see, there's the high right there, and we just kind of revisited it, and we're not pulling back aggressively on high volume. So this open could be very interesting. I'm sure it will be. So I'm going to mute myself. I will be back in, like I said, about 10 minutes. So grab yourself some coffee or tea or whatever, and we'll be back in a few minutes. Okay, I am back. A little bit faster than I thought I would be. Okay, so what is going on here? We are dribbling up at the highs. ES got over 5,500. It's right on this liquidity up here, which is the top of the range. Value is quite a bit lower down now, but that's going to come up with all this volume up here. So, we don't really have, or do we? Let's see. We have a talking head starting right now. Ooh, that could create some more volatility, guys. Williams is speaking right now. So that could definitely, and we have Waller later, but right now is Williams. So that could definitely get this jerky, and he's probably going to respond to whatever the NFP numbers are in his remarks. So, or his interpretation of it. And again, all eyes are on the Fed. When will they cut? Yada, yada, yada. Whoa, big sweep up there. Well, the market liked something he said and it ran stops with it. So again, this is a long setup if you can get a good entry further down, but up here, you're taking some risks staying long. If you want the wave volume again, you can see that's the high right there. We're just testing it. And we've been there once before, and well, the volume on the upside swings is more significant than the downside, that's for sure. This move up was on 3K, and these little gyrations were on 1K. So but that was mostly a stops run. That's the problem with that. If you look over at the footprint, it was all zero by something up there, and that's what stops look like when they get hit. And again, that thin liquidity up here is causing this. So I would be very cautious not to have an opinion quite yet. As this kind of gets more baked in, there will be better trade opportunities. Yeah, see, look at on the ES side, 3K pullbacks, 9K of volume on the up moves. So definitely more aggressive to the upside. So you want to be playing long or nothing, but again, just going long up here, just a pullback to the top of value costs you 11 points, and that's just too much risk. It's something most new traders don't pay enough attention to is risk management. There's all sorts of good trades all the time. Finding good trades is really easy, but being able to manage the risk of that trade is what's tricky. Like right now, this is a clear long, but from where? Where are you wrong? If it starts going down, where's the long no longer true? Well, that's the problem with being long here. And it's getting absorbed also. And they're running stops. All of those things say we're likely to pull back at least to the volume down here around 10. So again, being patient and waiting for not only opportunities to work the movement, but you have to find opportunities to work the movement where it's risk appropriate. And, it's pretty clear we're going up here, but again, just staying long will be too risky. So continues to push. Let's see if I can find a long in NQ. That will be easier under these conditions than EF. So right now it's trading around 50, which usually is a good place to fade it, and go short. But a pullback here too. Let's see, where did this all start aggressively? Yeah, it would have to be as low as 10, like somewhere down there, maybe. Um, and I don't want both of these on MNQ. This one should be on NQ. Same thing as the other side. Okay. Just for fun, I just threw a short on up here. I'm going to see if I could protect it. And the answer is no. But we're percolating up here a lot, which means we probably could scalp it short, as long as we don't get too aggressive too fast. You know what? I'm going to put that back so we can see where those are. So now you'll be able to see where those orders are, because sometimes they're too far up here on the tick by tick. So I put these both back to MNQ so I could do that. 40, that could be a spot right there. Uh, okay, we got a fill on 40. See if we can just scalp it going down a bit. Yeah, that's what we're going to do here. Just scalp for a quick profit. Well, we're starting to build a high here, so this is interesting. Pullbacks are longs, but you can also fade short, like I've just done a couple of times. So, and that's because we're at a decent extreme. We're up here at SD2 of the VWAP so far. Let's see if they can run the stops again, and we can maybe scale a short up here. If you're going to do that, though, you got to be prepared to trade up to about 70 from 50. So again, you can't be too ambitious too quickly. All right, I just took one there. And again, let's put a target way down here, like there. And again, on the crunched version over here, you can kind of see the relative movement of where I'm putting the orders, because on this one, tick by tick, they're pretty spread out. So I'm going to take profit on this right there. Okay. I'm short again here from 47. I might have a protectable short here now. Going to try to protect it with that stop right there. There we go. Okay, now we got a runner down. Again, it's just micros, but I'm just kind of warming up here for the open. All right, that one worked too. Wash, rinse, repeat. Hmm. Oh, this is fun. I'm curious to see what the top of the hour is going to look like. We're getting really good volatility. I don't know if that's because Williams is talking or what, but it's really good scalping up here in NQ. I'm gonna leave ES till we get to the open before I get aggressive over there, I think, because it's just kind of consolidating at the highs. This is much more tradable, the movement in NQ. And again, they're micro, so we're not going to get rich doing them, but what do we got here so far? Um, we're up a couple $100. I'll take it. That's why that wasn't working. Zero. Okay. Yeah, this is still a short, but again, it's a weak short now. We're almost back on value. So, all right, so here's what we'll do. I'm going to leave these orders up here and see if I can catch a fill on another bounce. Otherwise, we'll kind of just watch for a few minutes, let the talking heads continue to talk. And vehicle sales is the next thing, and that's at the top of the hour after the open. So, that's not likely to do much. So we ought to be able to just trade the price action going forward now. It'd be nice if the liquidity picked up a bit. So far, it's still pretty thin over here on ES, and nobody wants to step in front of this volatility with a big size. If anybody has any questions on anything, by all means, let me have them in the chat. Just kind of having fun trading this until we get to the opening setups. This is definitely scalpable. Let's see if we can get another push up, maybe to 40. So you can see this lets you see the orders that are all stacked up there. So this is kind of a cool approach to doing that, tick by tick and point by point. So while I'm waiting to see if that gets up there, if you just look at the wave volume for NQ, it's telling me that there's probably a long right here, but the short's much more interesting, particularly if they can run the stops at the high. So we could trade long from here, but then you get a big sweep down like that one we just saw there. And again, it's the problem with the long right now is where you're wrong. It's kind of getting digested, and the shorts are looking much more interesting. Although that's not true yet in ES. It may be up at 17 again. Look at all that absorption, but we're still right there. We're not far away, so that leads me to be hesitant to play there and instead play the movement over here in NQ because the movement is always very tradable. Even if you aren't working any one particular direction, movement is always scalpable. And I'm scalping short at the high here, but if it pushes down enough, I'll look for a long as well. It's not that I'm just biased to be short. It's just given where we are and where the high is and the stops runs up there, that's a better spot to be doing what I'm doing than trying to buy the long. So all right. So the open is in about a half an hour, and I don't want to just keep talking between now and then. So I think I'm going to take another break as soon as we get to the top of the hour. I want to see the rotation into the next period, which is the period before we open, in market profile, the half an hour before we open. I want to see what happens there and see if we can push the highs again right at the top of the hour. If we do, that would be ideal. And then if not, we'll take a break and then we'll go for the opening trades and we'll explain how to use this stuff in a little more detail and a little bit more about the upcoming class. So we have many things going on. Let's see if we can get short up here. Gonna try to short 38. How about 37? Okay, I got filled at 37 and it instantly worked. So that's a good spot. Let's see if we can protect it. There we go. Now I've got, once again, a protected short. So it sweeps up, I take profit. If it had swept down, we could have maybe caught a runner down. So can do that over and over and over again. If you learn how to read the short-term order flow and the wave volume, this is kind of a summary of the order flow because it's just looking at the volume of the swings and how far it's getting in ticks. That's what the little yellow numbers are, volume and ticks. But that it's much more precise if you look at the trading at individual levels and whether it's on the buy side or the sell side. And that's where the footprints and the domes are useful to kind of be more specific. But if you're just looking to learn order flow and find good entries and exits, wave volume is ideal. That's what I'm watching on these plots, and I'll blow them up occasionally, and we'll talk about how to read them. And we're also going to use that other um, one instrument view once we get past the open. But for the open, I want to be able to watch both instruments. So that's the plan. If anybody has any questions or comments, put them in the chat. I will try to answer all questions. Again, we're pushing up here. Let's see if we can get another short scalp. Maybe there's 40 again. There's 38. Let's see. Last time I got filled at 37. Let's see if we can get that again. I'll try for 35. We got it. I got 2 for 36.50. Let's try to get one off quickly. Now we have 3. Okay, another stops runs going. Be careful fading this too hard, too fast, because it's going to try to push up. And so I'm going to try to get aggressively short into it. But it might mean going a lot. If it clears 50, it could go to 80 very fast. So you have to be prepared to scale this if you're going to do it this way. And that's what I'm doing. What I want to do is try to get a position and then get stops between the entry and the position. So it needs to go a little lower here and I've got my 4 lot. I took profits on one of them. Let's try to get another couple off or scale it more up here. So there we go. We have another one now. We have 5. We should have 6 in a second as it tests 50. Watch that right there. And again, we'll take some profits going the other way. So I'm just going to kind of try to work a core position here. And so I'll add to it up here. I'll take profits on the other end, and we'll just kind of see if we can work our way into a decent position. Whoa, big sweep down there. That was perfect. Okay, now I've got a really nice one lot here from 47. So I'll protect it as I can. So there's 5 points. There's 7 points. And we get hit. You could do this all day. This is primarily the way I trade, is scalping price action. But going into the open, there's some very specific setups, and we'll talk about those. The open 5, or the opening range setup, as the pit used to call it, and then there's the 15-minute break. Today, the 15-minute break could be a really, really good trade because we've gotten NFP. So most, the news is in. Whether it's priced in or not remains to be seen, but we at least, know there's nothing really big coming. So that's kind of important. I don't see any questions. All right. And again, we're not going to get rich doing this, but they add up. That's kind of the whole idea, not take a lot of risk and just lots of little winners. And if you have to take a loser, make it be not too big. And again, this area between 20 and 40 is trading really aggressively. And you can see the top end of it gets sold where my orders are. And the bottom end of it is not really getting bought aggressively. It's getting bought, but not nearly as aggressively as it's getting sold up here. This heavy volume on the ask, not an equivalent amount of volume on the bid down here. So we're probably going to go a little lower before we go up again. And there it goes. So I'm going to cancel these orders and just kind of reset my brain for a while here. And we'll talk more about the opening setups in a few minutes. So this is a good time to take a short break if you'd like. And otherwise, put any questions you have in the chat. We will trade the open in about 15 minutes. So from here, I'm just going to kind of watch. I'll leave my headset on and I'll leave the chat running. So if anybody has questions, just stick them there. And we'll go from there. Very interesting. So, you can see that was the news poke up. We took it out with a stops run, and now we're just kind of drifting back to value. So that's NQ. This is ES. Pretty much did the same thing, but it's still at an extreme more than NQ is. It's still right where the high got taken out. That's why I'm not trading it right now. That's why I'm trading NQ. It's just an easier um, set of movement to manage the risk for. So I hope that makes sense. If it doesn't, ask questions. I'll try to answer them for you. Oh shoot! I just my early morning Amazon guide is here, and I need to talk to him for a second. I'll be right back. All righty. I am back and coughing. Pardon me. Anyway, I started to introduce my background for those of you that are guests. I started trading in 1973, trading options on buyout candidates. I was 13 at the time, traded options all the way through college at UCLA and business school, and I became a futures trader in the late 80s and traded electronically in the 90s and used to go to the floor and visit a lot. I was not a floor trader, but I was guests of them. So I used to observe the floor a lot. It was a lot of fun. And I've been writing code and approaches to scalping since the late 1990s, starting on eSignal and then TradeStation and then TT and Jigsaw and Sierra Chart and Market Delta and Investor RT and TOS and Ninja Trader and Jigsaw. You name a platform, I can trade on it, and I've probably used it. I use Jigsaw and Sierra mostly now with a little bit of Thinkorswim for just stuff like this heat map right here. Once the equities open, that we can see what equities are up or down, and that can help us game the futures. So that's in Thinkorswim, but you can get a heat map like that in a lot of places. Anyway, so this might be, well, you know what? I'll do it in a few minutes. I want to go through and just explain briefly what each thing on my screen is. But right now, I think I want to watch the ES side of this alone just because it's holding the highs so well. Look at that right there. We're above the reaction high of the news, and we're consolidating up here, and the liquidity is still really shitty. So I'm also watching on the ES, in addition to the liquidity, I'm watching stacking and pulling. That's what's in the yellow here. And that's the change to the liquidity instantaneously. And that kind of tells you if the order book is shifting. Right now, we're getting absorbed on the sell side pretty aggressively. Everybody buying here is getting absorbed, but now there's a little stops run coming. Okay, let's see if we can perk through here. This could be a long setup right now. Let's get our domes up. This could be a long. Let's see if we can find a place to play it from. 17 and a half. Okay. Let's see if we can grab a quick 4 or 5 ticks here. There's 2. Yeah, let's just take 4 ticks real fast. I think I'll be able to get that many. That push down. All right, I'm going to scale this just a bit like I did on the NQ trade. If I can. No, it's going to take me out profitably right there. Now, again, it teased me. Trading right to my exit. didn't fill. So let's just grab 2 ticks here and see if we can scale it a little bit further down. Perfect. Okay. Don't want to get, this is the problem with trying to be long is, where are you wrong? And a big push down here could make me really off sides, but the volume is still on the upside dramatically. So gonna have to scale it and try to be as aggressive as it is going down. And again, in ES minis, that can get you offside a lot very quickly. So value is still down here. I still think I'm probably early for this idea. So let's see if we can catch we don't have anything like the tick or anything like that yet because the equities aren't trading other than a few pre-markets. So it's hard to game the action this time of day. And again, value's all the way down here, so I could be offsides here. But let's see. Last push up was not a stops run so much, but we didn't really leave any unfinished up there either. So that was the most orderly the high's been yet. So I'm probably offsides a bit here, but let's let it play out. Here it comes. Okay, that's what we want. That's the short squeeze again. Let's take profit into this move and see if we can catch a runner, maybe back up to the highs if they push it again. Watch the wave volume here. We only pulled back on 1.8K. See right there? And we went up on 7.5K. That's why I did that long, but I had to take a little bit too much risk to make it work because it went down further than I thought it was. But now we're taking nice profits up here. So let's see. I still have 2. I'm going to see if I can get underneath one of them. All right, now we can see if we can get a runner. No, all right, so we made a quick $60, I think there. That's fine. Tricky top again. If this was regular trading, that would be a really good long. But we're just a little early, and we could pull back all the way down here to like 5, and that would just be into where it broke out from right here. That would just get us like right to this low. So it's just a little too risky trying to play it up here, and I don't want to keep taking that risk. So. But we'll watch it and we'll come back to this screen if it's appropriate. Otherwise, what we'll do is go to the one that has both on it so we can see if we can get some more NQ trades, which is looking like the better instrument to trade so far. Again, just because the movement has been more gameable. Yeah, you could have done a short here, Cal. It traded right into the liquidity. It was a good short, good absorption. That's what I was saying as well. But it still feels like they're going to set up a couple more short squeeze pushes up here. But the closer we get to the open, that typically is a game they'll try to play between now and the open. That's the 2-on-2 thing. Push ledges to fade them. If you're a fairly large trader and the liquidity is this thin, it's fairly easy to do that. Essentially, buy to sell, buy here to sell higher up, in other words. And so that's the ideal short. But if you can catch the short squeeze up into it, that ran the stops, that was a really good spot for a short right there. You can see that spike. It's just not pulling back very much. That's what would make me cautious of being short for very long. Value's all the way down here, and the VWAP is all the way down there, the blue line. But again, it's just not pulling back a lot. It's the kind of setup that could easily run a short squeeze at the open. If we opened right here, ES would be opening roughly flat, and NQ would be gapping down just a tiny bit. So this is basically a flat open if we opened right here. And again, if you put that into context on the TPOs, it makes sense because we're basically right back in the range from yesterday after exploring lower and finding this double distribution. So this big air pocket in the middle of the double distribution right here, that's what's going to make this really hard to be long, because the really good long is down there at 54.80 on that volume down there. Up here, yeah, it's probably still going up, but again, if it starts going against you, you're going to have to either scale it really hard like I did, or you're going to have to just take a small loss, and that's going to be bleeding to death doing it that way. So I don't recommend that. I recommend instead trying to go with it as long as it's making higher highs, which it's barely doing, but it is doing that. So let's keep sitting on our hands here. We got about 15 till the open. This is a good potential scenario here to trade this pretty aggressively. So we'll see what we can do. Again, for those of you that are visiting, I'm Jeff. I'm one of the co-founders of TRG along with Lee Harris, who is not here. He was here earlier, but anyway, I'm primarily a price action scalper. I look at market structure and footprints to kind of gauge where the aggression is, but I tend to be quickly in and out, low risk, jump in, make money. I like to look at it. Good trades work right away. Good scalps work pretty fast. If you're sitting in a trade and it's not working, you're probably wrong. And always take profits. Even if they're small, they add up. Trying to get bigger profits out of a market move that's just not willing to give you bigger profits will cost you money. That's the whole idea of fixed R to R, that I'm looking for 3 times the return of my risk. You can't trade futures that way because they move too fast. The risk changes while you're in your trade. So, be very careful with those kinds of approaches. They generally don't work over time. The thing that works the best is price action. That's qualified by liquidity, because that's literally the auction. And if you see that and you can trade it, then you're trading with the auction, and that's what you want to do. The market is king. It will do what it wants to. Trying to predict it or put artificial risk reward constraints around it is not understanding how markets work. Literally, a market is designed to overrun those artificial restraints. In TRG, every Monday we have a session called the Ides of Monday, and one of the things we talk about on those sessions is some buddies of mine that are hedge fund traders, and we have a hedge fund call every Monday before the Ides call, so I kind of fill everybody in on what they're talking about. And I'll tell you, if you learn to listen to how those guys trade, it makes you a much better trader, even though you can't trade against them. But it helps you understand price movement and why we'll get to a high that's an all-time high and we'll overshoot it by 4 ticks or whatever and then go back down. That happens because people that can push the tape and push the price do that. That's their mission, is to see how far they can get it away from balance with the equities. We're a derivative of the equities, so there is some relationship that is roughly roughly correct, if you will. And so the farther you can push the futures away from that, the bigger the opportunity for a larger trader. So if you watch where the large passive traders are trading, it will tell you a lot about where you should be playing. And as a scalper, it's golden because they keep you from getting in trouble. That's why I watch the liquidity and how it's changing so closely, particularly in ES, because if you get on the wrong side of the liquidity in ES, you're never going to be able to work your way out of it. Scaling it in or out or not, it doesn't work because the liquidity, it's too hard to go through it quickly. It always pauses on liquidity, at least. Like it just did here. If you look, these white lines on this is called an auction vista heat map in Jigsaw. The white lines represent larger spots of liquidity. As you can see, it's plotted over here. So we just traded up into liquidity right there at around 18.5, and it immediately sold off because those are sellers up there and there weren't enough buyers to take them out. So it reversed. And so that's what you're seeing here. This is the delta. This is all the trades going by on the ask. And same thing over here, ask and the bid. So if you watch that and watch how it develops, you can see who's winning the battle at any given moment. And see, again, they're going to try to keep pushing the stops up to the liquidity. So now liquidity is up at 20. See how it all disappeared between here and there? So we're probably going to trade at least up to 19 and probably farther. There's the big liquidities all the way up here. So this is a decent long setup, but it's also a fadeable short if it just overruns this by a little bit. So that's kind of what I'm trying to do by parking up here with limit orders. Let it come up and get me and then trade the liquidity. I'm the liquidity now. So I'm kind of playing the game that the larger traders do. park up here, let the market come to you. Often what they will do is put large size at the extremes, and then they'll bid it up with small size. So they might end up buying 100 to get up there, and then it gets up there, they'll sell 1,000. So, and see, that's what, right there. We just happened again. We traded right into this liquidity right here at 1875. You can see it, the balance there. It was all on the ask. So the most recent one was 41 to 67, but it's net 81. So 81 to 0 have traded there, at least since I started tracking it. So that's telling you very clearly that you want to be a seller there, at least right now. Again, if it got through there, the next place to be a seller would be all the way up here. So you'd have to decide if you want to do both of those, in which case I would, because that would end up with a really nice short around 21, and a pullback even to 18 or so would be a really nice winner. So that's a simple explanation of how you use liquidity and order flow to scalp. Very simple. That's what I will be talking about in class. And I will be showing how to use the wave volume to kind of help figure those spots out. And we're seeing that right now. See how it got balanced now, 1.8K up, 1.8K down. The auction is balanced at the high and the low. That nobody's winning. The sellers and the buyers are kind of in agreement right around this spot. So whenever that's the case, it's always a good idea to kind of reset all the volume and then just see what the new volume looks like. And right now the sellers are winning here. From about 15 down, the sellers are winning. That was right there. See that little bit of liquidity. Now we're back there. And the significant liquidity is all the way up here, 18, 19. That's where the volume also tails off. So again, that's a good spot to maybe get short, but it might want to go higher than that. So you got to be prepared to either play that bigger or just try it with a one lot and it works or it doesn't. You know, those are both legitimate approaches depending on your skill level and your tolerance for risk. So I see a lot of folks. If anybody has questions, please let me have them. That's the whole purpose of doing these kind of free preview sessions. This is kind of examples of what the class will be about. If you want, we might be about to push up again. You could play long right here, but it's dangerous. I'd rather try to short it on the push up right to the, like 18 would be the first place. So I'm a little early right here. So let's see if we can get a fill. Meanwhile, again, let me just pull this up. This is the story of the class. We're going to have a total of 10 sessions. You can see all the different things we're going to be doing here. There's an example of my screen that we're on right now. So basically, this is how to trade any time of the day or night, just using the price action, the liquidity, and the traded volume, which is the order flow. See, since I reset it, what's happening here? It came up here and the buyers couldn't push it any higher, and they're getting absorbed right here around 16. All the buyers are getting absorbed. See, every trade, it pushes up, but the trades keep trading, not every trade, but the bulk of the trades are trading on the blue. In other words, on the ask. So buyers are getting absorbed by sellers. Let's see if we can get a short on up here. Get it down a bit. Okay, I'm short 17.25 on the first one. We'll just try to scout for a quick 4 ticks there. Oh, it almost filled me, but then it squared it up. So we're going to try to run stops here. This is good. Let's see if we can get another fill up here. Good. Now we're in a good spot for a little bit of a runner, maybe. Try to get one off and then catch a runner on the second one. And again, the liquidity is up here at 20, so it's probably going to try to push up and trade that liquidity. Look at NQ. NQ just shot through stops up here. Remember I said if it got above 50, it's going to go to 80? Well, it's at 70 over there already. So, and we got run over a bit here, but I think we can play this. I'm going to scale it just a bit. Again, a pullback just into this low volume here. As long as we don't have a really wicked short squeeze. If we get a wicked short squeeze, I'm going to have to get out of the way here. But no, it's sweeping down. Perfect, perfect. So we can take profits right here. Again, good trades work right away. Take profits right away. I've got a 6 lot, so I've got lots of room for runners here, but I want to take the first few off as quick as I can. That way I have the potential to stay with the runner. Otherwise, I might have to scale it more further up again. There's the next quarter number. Watch quarter numbers. 22.5 is a quarter number. 20 is a quarter number. So you want to watch the rotations around the quarter numbers in ES. It's been doing that forever. It's nobody really knows why. It's kind of human nature, but ES always trades aggressively around quarter numbers. The next one up right now is 22 and a half and then 25. So just, break any 10 into quarters. That's the quarter numbers. So the next one down is 20. And if we sweep down to 20, I'll get filled on these first few targets, and that'll be a nice potential to run back into the range down here. But I'm starting to get a little bit off sides on this. So again, a short squeeze is really likely at the open, and we're getting a little too close to it here. This is what I call the 2 and 2, though, when they run stops right before the open. And sometimes you can catch really good trades, but you've got to be very nimble and willing to take some risk. Here we go. Sweep down here, and I'll be in really nice shape on this. Perfect. Perfect. Okay. Now I got two left and they're profitable here. So there we go. I can protect those two. Now I've got a really nice short from 22. See how that worked out? And it's, I had to take a little risk, but I could see that coming. It was really clear. See right there that they were going to run the stops, and they did. So now we've got a really profitable trade, and we can just protect that two lot. And, it could trade all the way back to the VWAP or the value area high down here. It could be a massive winner. Look at this. Short from 22, we're trading 16. So this is the kind of stuff I'm going to show you guys how to do in the class. This is a nice, I've got two left. I had seven. We've got a $500 profit on this trade before the open. I think that's pretty cool. I don't know about you, but I look at scalping as really well-paid hourly work. I can make a couple $1,000s an hour doing this, and, do it whenever I feel like doing it. That's pretty cool. That's a lot of freedom. Okay, we're taking profits here on one of them. I got one left. It's well protected here. Profits are locked in from 22. We'll do it at 17. So I've locked in 5 points here. And if it continues down, I'll be in really good shape. And I can, trail it, but it's probably going to bounce here. Yeah, it's trying to bounce. You can see we're right at the bottom of the range there. That's where the regression of the range is so valuable. This is just a statistical view of the range. And sure enough, it bounced right at the bottom of the statistical range. That's because there's a lot of statistical traders, and they do stuff like that. All right, that was a really good example for you playing the home game. Try not to duplicate what I'm doing. People do that sometimes when I do these live sessions. You're much better off watching it and listening, because it's a technique I'm demonstrating, whether it's 1 micro or 10 minis. It's just a technique that is scalable and duplicatable, up to you, depending on your risk tolerance and how big your account is and all that stuff. It's difficult to do the technique I just showed you in any of the quote unquote evaluators like Apex or whatever, because they have this silly trailing drawdown stuff, and they don't want you scaling in and out of trades like that because they can't copy it. It's too hard to copy at their end. So they'll tell you that it's a poor way to trade, or it's dollar cost averaging, which isn't a term in the futures market, but they use that. Again, it's a lot of lack of experience and ignorance, and it's their profit model. That's the trailing drawdown. That's how they make money. So just understand, this is cash account stuff. And if you're going to trade in those places, you're going to have to follow a little different set of rules. They're casino, not the market. Will we be posting this on YouTube? That's a good question. Let's see. JVC isn't here anymore right now. Whoa, talk about a big push down. Look what's going on over here in NQ. Remember, we traded all the way up to 70 and now we're back at 40. So really good action over there. I can ask him to. We could post it on our YouTube channel. I'll ask JVC to do that. Gotcha. Yeah, I appreciate that. Okay, I just sent a message to JVC to that effect, so I'm sure he can handle that. If we don't get it done, and then after this recording is out, Chris, remind me and I will pursue that. Okay, we're a minute from the open here, so let's get ready to rumble. And again, look at ES pushing down. It's almost half the way back to value area high now. So you're going to see my domes reset when the market opens. I run the domes for regular trading hours only, but I'm still watching, the footprints I showed you and whatnot on another monitor so I can see what the overnight looked like. But I like to get completely fresh volume and value areas for regular trading, particularly on a day like this when we're likely to have a lot of action right at the open. Hey, there's the opening bell. Let's see what she does. The open is always price discovery, and what's called the opening range, which is the first 30 seconds to a minute, and it's the red lines plotting on my NQ dome over there on the left. Um, whichever way it breaks from that was considered significant in the pit days, and it still is. So watch right here. Looks like it's going to try to break to the upside. Let's see if it does. And we're still forming the range though here. So, and then after that, the next range that I watch closely for breaks is the 15-minute range, and we watch that over in ES. But here we go again. It's pushing the opening minutes pushing up pretty strongly, so I would be careful shorting this right now. Let's see, but particularly when it moves up like this, when it pulls back to the open, that's often a good spot to get long. So let's watch that. That would be like around 30 in NQ. So that would be we're almost back down there. So like right here where I just put that order. So let's see if that fills. Right there. And it filled. Okay. Well, cool. That was like an instant winner. So let's protect it. That's what I mean by good trades work right away. And you can, that setup is a really good one, from the extreme back to the open, from going whichever direction it's above the open or below it. If it's below it, you go the other way and short it on the bounce back. So that's a really cool quick setup. I call that the open five. It's the opening price discovery. And the next setup that's good here, the open five goes for the first 30 seconds to 5 minutes. So that's trade still actually happening. There might be another long here in NQ. It would be like right around here. Let's just hit the market, see if we can get a long. Oh, that was nice. Long from 30. Again, it was profitable right away, but it feels like it might want to go lower. I'm going to add a little bit to this. Let's see how far down it can push. Okay. I'm getting a lot of lag on my platform now just because we're moving around so much. So now I've got a 5 lot of micros. And again, I'm going to try to take profits fast, but I'm prepared to scale this a little bit. It's pushing down pretty aggressively. And I think it might be a decent spot to nibble for a long, but again, got to be prepared to take the risk. So I'm going to scale this quite a bit. It's really lagging too. I'm going to have to pause Zoom for a second. It's lagging me here. Give me a second. I'll bring it back up as soon as I can. But it's forcing me to, I'm not putting the trades in the right places because it's lagging. So give me a minute to get that caught up, and then I'll turn this share back on. Okay, here we go. We got a really nice winner going over here. Let me see if I can get the share on so you can see it. I've got 29 micros and I'm up another about almost $1,000 here. I'm going to start selling them. So that was a perfect long off the low, but I had to take a good deal of risk to do it. But now we've got a really nice, profitable. Ah, God, I've got 20 lots still on. I can't sell these fast enough. It's lagging again. Geez. Okay, now we got 15. 13. I don't know if it's lagging. I don't want to end up with a short here. I'm just taking market orders. Now we have 10. Now we have 9. Okay, let's try to get underneath this now with some stops. So now I've got a protectable long, but it's really jerky. So you can see I've got a 7 lot. It's about $1,000 here. And again, I'm going to be really aggressive taking profits. But if this continues to break to the upside and we start another short squeeze, which could be happening, look at the tick. I could easily end up with a couple of $1,000 trade here. We're right back at the open. Let's see if we can clear the open. That's key. Watch that spot. And I'm going to put some more protection underneath this. Whoops. Don't want buy orders. I want sell orders. Okay. So we have 5 left. We're right on $1,000 of profit with these last 5 micros. Now it's ripping to the upside. There we go. Now we've got our short squeeze. Cool. All right, let's get these stops caught up. Oh, this is fun. Okay, should have less than 5, 3. That's right. Okay, now I have 3 left. Now I have 2 left. That's hits. Okay, let's see. Probably gonna get taken out right there. Okay, I think I'm flat now. Let's see. Wait for that to catch up. Yeah. Okay, well that was really fun. That was like $1,000 trade. So we're up about 1,300 now. So that's pretty cool. It's really a wild tape though. It's all over the place. So um let's see. Yep, another win. All right, if you have any questions, let me have them. That was a really, really great trade, and I'm hesitant to push it now because now we're back below the open and it's kind of exploring down again. And when you have a really good open and you make 4 or 5 figures, it's always a good idea to take a little break. And we want to wait for the 15-minute setup, which is in about 9 minutes. Meanwhile, if we look at the heat map, nothing significantly up or down except Broadcom. And so nothing to see there. And then as far as the internals, this is what they look like. The tick opened weak and improved, and now it's holding above 0. Same thing in the NASDAQ. Advanced decline opened fairly strong, and improved a little bit, but it's not really strong. And the NASDAQ advanced decline is heading down. So I'd be careful doing longs again, but I wouldn't be in a rush to short. It is going down though. So now we're seeing the other end of the move, and now we just had a new low tick. We're probably going to take out the lows pretty aggressively here. So real volatile stuff. Let's wait for the 15-minute trade. It's going to be a really good break, whichever way it goes. So I'm going to take a break now. We'll come back for the 15-minute setup, which is in about 7 minutes now. So where's my notepad? Hang on a second. And again, if you have any questions or comments, put them in the chat. I'll try to answer all your questions. But this is the kind of stuff I'm going to be teaching in the class. And it's going to be 10 sessions starting on the 16th. And I posted the link if you guys want to check it out. It's in the chat. And I am here. We will resume about, let's say 6:42. And right now it's 6:38. And the tick is dropping and we're testing the lows, as you can see. So let's just let that play out for a while, and then we'll come back and see if we can find some more trades. Kento, hi Jeff. When you watch the tape action of the NQ dome, do I focus on the dome, which shows point by point, or tick by both? What I'm doing on the point by point one is I can see the whole range. So that helps me understand the overall auction better. But if you do it point by point, you can't enter orders and exit orders precisely enough. And so that's what I'm looking for to see where the liquidity is positioned. And that's where I position my orders on the tick by tick one. So very good question. And you could trade with just one or the other, but having the crunched one is really powerful. It really helps you understand, the extremes of the range much more clearly. Like right now, you can see all the buyers down here in the low 20s, and over here on tick by tick, it's so spread out that it's really hard to see where that is. So very good question. If you have a follow-up, let me have it. I'm going to mute myself here and go take a quick break so we can come back for the 15-minute setup. I'll be right back. Yeah, you're most welcome. Good question. Okay, so you can see we've got some downside energy, but look at the size of the bounces. So again, I wouldn't want to be on either side of this. This is one of the criteria I use for trades, and I'll share real quickly. If you're in TRG, you've seen this before. If you're a guest, this is the criteria that I use to make trades. I'll share a document with you guys. And right now, one of the number one criteria not to trade is happening. So here's the criteria. What's the time of day? Everything's different, different times of day. And right now we need to wait for the 15 because we're in price discovery. And the problem is sweeps. We're seeing sweeps in both directions. Big sweep up, big sweep down. That's not tradable. That's price discovery. And that's a deal breaker unless the sweeps are only going in the direction you're trading. And right now they're going both ways. So those are unfriendly sweeps. And so at the moment, I wouldn't trade anything here. We need to let it settle a bit and see what the 15-minute break is. So the bottom of the 15-minute range is right down there. That's our current bottom. And the top is our current top. So we didn't have a big gap open. If there's a big gap open, the statistics of this setup is different. If there's a big gap and you go with it, the odds are almost 100% this setup works. I say almost. I've never found an example where it doesn't in the last 20 years, but 100% setups are, that's kind of a unicorn. So call it whatever you want, close to 100%. But that's only true when we have a big gap. When we don't have a big gap, this setup, the opening 15 setup is about 87% accurate. And here's what you're looking for. If we break the opening 15-minute range with a weak break, a couple of ticks to a couple of points, you generally want to fade that. In other words, fade back into the range from whichever end you're at. So at the high, sell it. At the low, buy it. If the break of the 15-minute range is strong, like more than a couple of points, and it's aggressive, then in general, you want to go with it. And particularly if there was a gap in that same direction, that's the 100% statistic. But if you follow this as a guideline, it's about 87% accurate. And then it just becomes a question of execution. So it's probably the most predictable setup we get every day is the opening 15. So I'll show you an example of it from yesterday, just to show an example. Let me move this back. So this is ES 5-minute bars, and we'll look back at yesterday's open 15 just as one example. So this is today over here. So this is the 15-minute, this line in the yellow. So that's when we got to the 15-minute, and a weak break is a short, a strong break is a long. Well, look, it was a really strong break. So you just join it, and you even had a second, third chance to do it. And then it broke down strong the other way. So you can often trade both ways, but that's the guideline you're looking for. Is it a weak or a strong break the first try, either direction, and then subsequent ones might be tradable or might not. But the statistics on the first one are the ones that I was mentioning. We're still getting sweeps. Oh, sorry, excuse me, I'm yawning. We're still getting sweeps in both directions, really big time here. And so, it's almost not tradable when that's happening. Well, it's not almost, it isn't tradable when that's happening. That's price discovery. There's three kinds of price action. Price discovery is this, where it's going up and down aggressively in both directions. And, that's just impossible to trade because it's trying to find value and it's not finding it decisively. Ebb and flow, on the other hand, when it's doing that in a tight range, not a big giant range like it's doing this, when it's doing that in a tight range, that's very tradable because the range will tend to hold, but we're just not there yet. And the third type of price action is high momentum, when it's going one way aggressively instead of back and forth aggressively. And we're seeing bursts of high momentum, but they're not following through in that direction. It's turning and going back the other way. So this is price discovery. And in general, you don't want to trade price discovery. It's very, very hard to trade. Even if you get it right, getting out with your profits can be very difficult. So, but high momentum is very tradable. You join it. You try to find every place you can join high momentum in the direction it's going. And then ebb and flow in a range, you trade the range, but you got to let the ranges develop, and it's too early in the session for the range. We'll get that open 15, which now, anytime from now on, whichever way we break the 15-minute range is significant. So watch that. Problem is it's pretty far away, and we had a pretty volatile open, so it might not happen quickly. But let's watch that. Also, it's a good time to look at the internals, which we just did, and they're kind of okay and improving, but not dramatically. And NQ is, well, now NQ is trying to improve. The NQ tick just went way up right there. And the ticks are basically what the equities are doing. So the NYSE tick, that's the broad market, what's going up versus what's going down. NQ tick is the NASDAQ 100, what's going up versus down, and the same thing with the SPX, that's the S&P 500. So it's just basically a way to see what the equities are doing, because, if we're going way up and they're going way down, that's not sustainable. So there's going to be a reckoning and they're going to come together one way or another. But when you're seeing, a weak open that pushes up like that and finds sellers, that's generally a really good short because you're kind of in line with what the equities are doing. So that's why I was looking for shorts as aggressively up there as I was. But here, we're in the middle of the range. We're on the VWAP. That, old school traders, you'll hear them say something over and over again, which is stay out of the middle. The middle is the worst place to be unless it's like the middle of the day when we have a really quiet range. but this is the middle that's all over the place. So, and the problem with the middle is you can't game it either way. You know, where are you wrong if you're long, and where are you wrong if you're short if we're in the middle. But as we go up, it's much easier to do that, and as we go down, it's much easier to do that. But here, literally, because it's value, the market agrees here. So there's no real edge in the order flow at all to trade around value unless there's strong momentum one way or the other. And right now we don't have strong momentum one way or the other. We have two-way jerky, sweepy momentum, and that's just not tradable. So let's see if we can it's pushing down a little bit here. Let's see if it can get down to the lows, and a weak break of the low would be a very interesting long right now. You could also argue for a long right here at the value area low, which is about 14, 13 and a half right there. And you see there was some responsive buying right at that spot. That's typical because that's the bottom of value at the moment, but it's a much less risky long to play down here somewhere where the liquidity is parked down around 10. That's probably a better spot to look for a bounce. It'll be easier to manage the risk. But it has bounced now off of that bottom of the value area 3 times, and it's just not enough liquidity right there to really want to trade that yet. So again, maybe right here, 12 and a half, down around 10. Those are the 2 spots I might try that. But a weak break would be much, much lower than this, all the way down here. So this might be way too early for a long. So let's see. So far, I'm not able to get a fill here. There we go. Swept down and filled me. Okay, now it swept right through that price. Let's see if we can catch a bounce going the other way and take a couple of these off. I have 3. Nope, it's selling down. So we're probably going to get a weak low, and I'm probably going to be way off sides here. That's probably what's going to happen. But if I can scale out of it on the way. Okay, there we go. Perfect. Now I've got a protected long again, right up to value area low. How about that? Another 200 in the bank. Let's take some profits and we're out. Okay. So again, if you learn what to look for, you can literally trade any time of the day or night. And that's what the class is about. So I think we're going to wrap up at the top of the hour. There's vehicle sales and then there's a speech an hour later, but I think I've shown most of what I wanted to show. So if there's any other questions from anybody, please let me have them. I'm happy to give them. Let's see, Kento, do I still have time in sales tape window? No, I don't. I pretty much watch that on the dome because, literally is when I reset this, I'm seeing the tape right there. That is the tape. And the momentum tail, the kind of coloring of it is helping me game it. So there's no reason to have another tape on top of that. And that's why the class is called what it is, chart to dome. I'm going to be explaining those types of things and how, you can get rid of a tape on the dome by watching this. And the idea is to ultimately just watch the dome and maybe some, shortcut tools like wave volume or the regression of the range. So anyway, this kind of summarizes all that right here. I'll just paste this into the chat so you guys can see that little quick summary there. There we go. Am I using Jigsaw's newest version? No, not yet. There's a new beta that's coming out. I might play with it during the class, but I'm not going to totally move to it yet just because it's beta. And for me, this is production. This is, I'm trading live for real money, and you don't want to be the guy running a beta of your primary trading platform. But I'm looking forward to some of the new stuff that's coming. So good question as well, Christian. Okay. Again, we'll wrap the top of the hour. If you have any other questions, let me know. This is, I wouldn't trade much here. We still haven't broken the 15-minute range, and we're at 10. Remember, I was just scalping this area a minute ago. It's risky to do that again here. We probably will test 0 down here and maybe get a weak break of the low. And that could be a very interesting long, but it also could be the beginning of the market breaking down. Look at the TPO, that we'd have to hold right about there at the low around 0.0. If it got much lower than that, it's going to probably at least go down and test that big bulge down at 80. And that's a 20-point drop you don't want to be long into if the 0-0 actually goes aggressively. So again, there could be a long there, but you're going to have to watch it real carefully when it plays out. And that might not be while we're still in this session. Oh, it might be right now. Hold on. See, it's coming down there again. We're watching for whether it's a weak break or not down here. We're trading into all this liquidity. So the first spot you might want to play is right here. So, but again, that's probably too early. It's key to see how this low holds or not. And so let's see if we can put on a little bit of a trade here and try to get a runner. I'm going to try to scale into this. We just hit a big negative on the tick, so it's going to push down. So now the equities are selling. That's what that means. So we're probably going to take out this low. And then, if I'm wrong, I'm going to be way off sides. But if I can get some profit off on the move up, I could have a really nice move back into the range. So I'm kind of playing aggressively to see if I get that. There we go. Okay, big sweep. Let's try to get one off here. And I'll have one left. There's one off there. Okay, now my target's going to be right up here around value because that's where it should at least try to get to. So let's see if it can. And again, I'll try to scale this a little bit, but I'm going to be very careful. If 0 goes aggressively, we could drop to 80 really fast, and you just don't want to be scaling into that if that happens. So right now it looks like it's holding here. Let's grab another one. Okay, here's the push down. This is the key spot right here. Can it hold this low? Let's try to scale out of it. And perfect. Okay, now I've got a protectable 4 lot. Let's take one off. Okay, geez, it's moving around a lot. Okay, now I've got 1 lot left. So let's see. There we go. It's heading up to that target. So let's get rid of the target and try to get under it. So this is another $400 here. So again, that's the spot it should try to retest right around 10. Nope, it's pushing down again, so we took profit. Okay, well, that was pretty cool. I got to show you guys that. We still haven't, well, I take that back. We did get, as I was doing that trade, we got a weak break of the low. There's the 15-minute right there. It broke it by 1, 2, 3, 4, 5, 7 ticks. So that was a perfect long setup down there. And here you can see that's the line right there. This blue line is the bottom of the 15 right now, and we just tested it with a weak break. I wouldn't necessarily do that again because if the low goes, it's going to go hard. But that you can see how it traded right into the liquidity right there. The liquidity traded the white, and then we bounced, and then it got sold right up here where we just got out. So I didn't quite make it up to value. Okay, are there any other questions or comments? We will wrap up in about 3 minutes here at the top of the hour. This has been kind of a long session since NFP, but I hope it was helpful to you. I hope you learned something. If you have any interest in the class, I hope you'll check it out. It's a really good deal. For literally, for 2 weeks, we're gonna have sessions, 90-minute sessions every day, maybe more than one, but at least one. And we're just going to show all different times of day examples of how to use this technique to trade. You don't need to worry about anything else. Where's the liquidity? How is price interacting with the liquidity? And where are the extremes of price in terms of volume or regression? That's what we're doing. Awesome, Kento. I'm glad you came. Thank you for coming, everybody. Okay, any other questions or comments? We just made a new low tick. So again, we're likely to take this low out. There might be a short down to the low again here. That's an interesting idea. I'm going to try it from 2.5 here. And so I'm short 2. I didn't get filled on the second one. There we go. It's already working. So again, our target is just to get down to around 0. It might go lower, but we're trading toward that, and now it's bouncing probably too much for this idea. So again, see the tick improve, but there we go. Now I'm taking profits. Okay, so this is a really good inflection point, but it's a tricky one to trade. So let's see. Now I have a 2 lot. Let's get one more off and then see if we can trade down to the bottom. Perfect. Okay, now we'll protect this. See, you can do this both directions. You just got to watch the inflection points. Now we got a nice couple $100 on a short back into that area, and it's probably going to take that low out. Let's see if we can ride that down. The tick is still negative, but it's improving, so I don't want to give my profit back, so I'll protect it pretty tight, and it's probably going to get hit there. Nope, going down. Ooh, we might catch it. We did. Perfect. Okay, there's the low going. See if we can ride this puppy down. We got a nice 5-point winner here, which I'll be happy to take, but it could become a 20-point winner if this low could really go. Nope. All right, that was a really good one to wrap up on. We're just about the top of the hour. We'll let the hour roll over and then we'll wrap up. So if you have more questions or comments, please put them in the chat. And again, please check out the page for the upcoming course. I think it will be well worth your money. And I'll post it right there again. Okay, let's see. Learned a lot. Okay, cool. I think I covered all the questions. Yeah. All right. So there you go. Again, one more time, I'll just throw that image up. And this is the class. That's the link to get to it. Really good deal. Lots of live examples, and I guarantee you'll learn something, put it that way. And we're pushing down. See, we took out the low. So again, that would have been a really nice short to ride down. It got all the way to 94.75. You could just see that coming, but I had to protect my profits. So I still had a nice trade. Oh, and by the way, how did we do? We made about $2,300 before commissions. So those are micros. Let me do the math real quick. And it's 20, did they call it 2175 ish? I don't worry about commissions till at the end of the day because they are what they are and they're different on my different accounts. So I just watch my net and I know in the back of my mind how much profit or loss there is once commissions are added in, which most brokers do at the end of the day. So and then if you have anything like, you're paying premium for a certain data feed or whatever, they take that out all at once net at the end of the day. So knowing how much your commissions are is important. But like I said, I don't worry about netting them out until the end of the day. And again, now we're down at 90. So it's still pushing down. Look at the volume on the wave volume there. It's really clear who's in control here. It's the shorts. But again, we've had some pretty good bounces. So you don't want to get off sides on that and have to stop out. Yeah, it was roughly $1,000 an hour. Not as much as you're making flying right now, Cal, but I'll take it. I didn't have to leave my bedroom. All right, everybody, it's top of the hour. We will wrap up here. Thank you, guests, for coming. Thanks, TRG folks, as usual. I will see everybody. I'm not doing any more sessions today. I have to go out for the rest of the day. There won't be a closing session today. But we will have our normal Ides of Monday and Monday live trading. So stay tuned for that. You're welcome, Chris. Thanks for coming, everybody. We'll see you later.